Good afternoon, everyone. Happy Friday, March 14th, 2025. Coming to you after the market close here on Trading Trends with another ETF episode. We're going to recap the day, the week, and see the biggest three trades of the year. And some are cementing further, including the leader now hitting a new 52-week high. I think you might know what I'm talking about. Let's take a look. If you like what we do here every day, why don't you hit subscribe and give me, some suggestions, put tickers in, whatever you feel like, ETF, single stocks, etc. All right, so let us get to the doc here today and see what the heck happened. Pretty interesting. The market had a big rally, but I do think it's important to note where really multiple standard deviation moves were, which is what we always do here. No narrative, no spinning up nonsense. I mean, it's a pretty messy picture here because it looks like a trading floor and an airplane went through the building, and it looks like we're somewhere in China here. But pretty much that's the theme. That's what we're looking for here. So today, first we'll recap. Pretty interesting. China and Brazil both leapt 4%. Massive move. China, of course, a winner. Best, I'll just foreshadowing, right, of the end before we do it at the end here. But FXI is your winning trade since last March. Crazy chart because it did have lows through there. And then, of course, the big rally in October until today. It surpassed those highs, and we have so much more to go if it continues. It's not near the 2021 highs yet, but we'll look at a chart in a second. So the difference I wanted to say is about the rotating from investors here globally. China, been a star, most enviable place in the world. Pretty crazy to say on a return basis from last March through today. Brazil, absolute loser. Used to be my persistent short, and now today a big day for. We'll take a look at the chart if maybe they're rotating into an underperformer in LATAM like that. And volatility did get a bit of a vol crush here through the VXX down 8%. So that was a nice crush here in volatility today. Needed the market to take a little bit of a sigh of relief, and it did a little bit today through the VIX contracting by about 8%. And the week, when you look back on it from Monday through today, really where the pain was, consumer-related stocks. Recession was the fear this week, and it comes down from like a lot of the trickle down if these tariffs are in fact enforced and passed. So Airlines dropped 6%. These are all 6% drops this week from Monday to Friday. Airlines, which has been a star, loved it, although a lot of shakeups in there. We'll take a look at the ETF. Ark stocks, again, high growth, not really the place to be. Tesla had an awful week. It's had an awful year, and it's a major constituent in Ark. Awful week for Ark, down 6%, or obviously if you could do math, a little bit more than 1% a day. And retail, as I said, consumer-related focused here. Airlines this week said demand was dropping, and they just don't see, the consumer continuing to spend. I think they're delaying their vacations and such, or just really not as aggressive as they've been in prior years. Potentially, obviously concerned about layoffs or just trying to tighten cash or go a little bit lower on the belt. And retail, like I said, down 6%. The index was down 2.5% this week, so no bueno there as well. We'll take a look at the chart. Still in limbo. Glad it's not collapsing. All right, so let us get to since we did that, let me see her. All right, so really fast, this is the intraday chart, but big movers up. NVIDIA up 5%. Still overall, the chart does not look like one of my favorites in the market. Some big movers here. Tesla up 4%. Palantir, this thing is a monster. One of the absolute, probably the best stock, United States based. If you had to buy one, I would probably go Palantir. It's in that nice place of the AI trade, plus high growth, but not super, like in the Ark complex. So you get a little bit of nice tailwinds, I would say, from Palantir. Meta still looks great. One of my favorites. If you have to buy one, the Mag 7, Meta looks great. MicroStrategies, if you had to play Bitcoin through that, you could buy MicroStrategies, but I'd rather you be an actual Bitcoin or IBIT. Netflix looks great, up 3%. Broadcom looks good. And from the big major caps, that's kind of it. I don't really like the others. A lot of them are on just standby, or I'd say short-term sell, like Apple. Microsoft looks awful. Tesla obviously doesn't look great. Google doesn't look swell. Amazon, like I think I mentioned, doesn't look good. So still a lot of weakness. We'll take a look at what it means. What it means for you. I don't know. I feel like I was selling used cars. Okay. So kind of like what we're doing here. So yeah, intraday chart. I knew this rally. I didn't think they were going to give up the ghost all day, and the reason why is again, you could always do technical analysis on micro time frames, larger. Yesterday we looked at 3-year charts. Today I'm looking at a 3-day chart technically. So 3 years to 3 days. What's the difference? But we had pretty strong trading pre-market. We were holding this 556. Again, we've been oversold yesterday when we hit that amazing level of 550. We'll see if that was the scoopy of the time being, if you're able to pick that up. But overall, nice trading here. And you also had a confirmation when I was looking here at 11:30 a.m. towards the European close. You had a bullish confirmation with price. Sometimes it's pretty rinky-dink in terms of doing it on a small time frame. Like I said, each of these bars is 30 minutes, but I still do get some analysis out of it. And then we actually ended up putting into new highs at 3:30 on the day. We got all the way to 564. And I liked also seeing the rising VWAP. And so for once, folks did want to go long into the weekend. It wasn't that, typical Monday through Thursday up and then Friday, give it all back. But this is a different market, obviously, and short-term resistance here. This is a 200 bar moving average, each one representing half hour. That resistance is at about 565. So as I zoom out here, good to see, that the market's not collapsing further and going under 550, but I've been calling for this market to base around the 565 level. So this is really just, this is no offense, but the market looks pretty weak. This is like, your fifth grade kid spelling cat and you're impressed with them. This is not what you want to see out of your superstar global leader, but never confuse, like my boy JC says, Peretz, never confuse rotation for a bear market. It's not the same thing. It's a big store and valuations do get stressed, especially due to the constituency in a lot of concentrated ETFs. And we had to pay the piper, and it just happened very quickly from Feb 19th, and today is not even, a month later. So as we say, this is really super duper important. March 10th, we began, a character change here of a close under the 200 moving average. You don't like to see this happen for more than a week to 2 weeks. 2 weeks, it really, really gets bad because 52-week lows typically follow, and the moving average starts to go lower. So as I can see here, the 200 moving average is still going up by 13 cents. It's not a ton. Probably, like I said, towards the end of next week. Yeah, towards the end of next week, possibly that 200 moving average starts to like really go flat, and then potentially starts to go south. As you can see here, all the low moving averages like my 50-day and my 21-day exponential are obviously going south. So don't like to see that momentum there. The important line in the sand is this 552 half line right here. I unfortunately think it's going to hold a lid on the market here. It's going to really try and get to that on the monkey bars. It's really going to, I think, be challenging for SPY, especially as, I do a little bit of foreshadowing at the end. The best trades in the market have very little exposure to the United States. So, it's almost like it's entirely different aisles of shopping. I think it's absolutely going to collapse here. And we, 52-week low down here at 495. I really don't think so. And again, some folks, get angry technicians because they expect the level to hold, and that's it. It's God. Again, like what we were saying the other day, if you're favorite player, for example, there's athletics tied in with with market performance, you'd be surprised in terms of streaks. If your guy's having a bad quarter, bad 2 quarters, bad 3, it's got a bad game, maybe bounces back the next night. These next nights are turning into sessions, games. We'll see if it takes into, a chunk of the season as opposed to just, it had a bad, week or 2. So this 572 line, very super duper important. I saw on the NASDAQ, we actually did break the trend line from the October 22 lows through today. Don't like to see that. That it really is a bit of a collapse. You don't like to see that because, like I said, there are investors and traders just going to other parts of the market. And we will look specifically at what they are looking at in the market. So finally, the good news is we're not oversold anymore. The problem is you are going to, my God, it's like when you're absolutely pushing yourself at the gym, trying to kill yourself to pull it out. That's what the S&P is going to take to get to that, 570, 80 mark. Hopefully it reclaims that 572. I think it's going to take 2 to 3 weeks. It's not going to be overnight because we're still in the sell to rip mentality. But I do think we start to get to that 572 to 580 mark over the next 2-3 weeks, probably into early April. The seasonality also does start to help us as we get out of late February, early March. Hopefully a couple of positive tweets also let some folks get some sleep. But market, like I said, first hurdle, get to the 572. After that, then stuff's going to really start to look good again. You know, your Nvidia and your Apples potentially. But really, S&P first needs to do that, hold above 572. And my God, ancient history right here, the 610, this lid on the market, that's looks like it's going to hold for a little bit unless you get a flux of buying. And really, you're going to need a lot of things to move under the hood. Not so sure it's going to happen quickly due to the other moves like gold making, you know, new all-time highs today. That's also all the rage. So let's first look at, so I think I spoke enough about S&P targets. This thing has to hold, you know, 565. This is like sad where it is. 561 level is not, we're down 2.5% on the week, and obviously just a horrendous week. So first level, I still expect that 550 to hold. If things get uglier, then obviously 540. But I don't expect that. Potentially this 200-day moving average, like I said, goes sideways to south next week. First stop, 572. Hopefully we can get to that and hold for at least a week. And then you can start thinking about this 580 level. But it's going to be a lot harder. I'm not even looking at that just now. All right. So what are they buying today? It's funny. Qs were up 2.5%. SPY up 2%. But we've been such in the crapper, it wasn't really, it didn't even show up on my multiple standard deviation mover of the day. It didn't even register. You know what did? China, okay? China through ASHRs. A lot of people sometimes don't know about this ETF. It is an alternative, not straight up alternative to FXI, but it has different holdings in terms of tech versus real estate and everything else. They call this the ASHRs. These guys peaked also October when she announced the stimulus, went to basically $36 stock. This has room to go in kind of a catch-up trade. So this is at $28 basically, or not basically, it's a $27.90, let's call it. FXI has experienced a new 52-week high today. This due to the constituency, a lot of people are playing this kind of wrappers within China. Do we play more so Chinese tech dispersion from KWeb versus other baskets versus, Baba or Billy or VIPs? Or XBEV, you could do an EV basket. You do more so Chinese real estate. That is a trade, consumer discretionary. Or do you play, different classes? So this one has, in terms of the catch-up trade, a lot of folks love doing this. The chart looks good. Rising 200-day moving average. It is essentially range bound. It's been stuck under this, basically stuck from 25 to 28, that 10% or so range since December 10th. So if you're anticipating breakouts, like we said, China looks wonderful. I'll look at the FXI chart in a bit as well. This one looks like it can go. I think they discovered that today, up 3.5% today. This thing is just, rocking and rolling. What do we think about, China near term, specifically through this ETF? Right now, my short-term full valuation is literally 27.75, 28.80. I'm looking at that upper Bollinger Band here, and which we accomplished here. I don't think it's ready to break out just so. Again, kind of a conflict is the FXI did break out here, and these are very correlated. So it is possible. I wouldn't want to chase it right here, though. A much better entry is right around, if you could get around 27 even. I like that. Volatility in China still exists. This has about $1, or what is the ATR on this sucker? ATR is about like 36 cents on a $28 stock. So this thing moves. Just pick your pockets. And again, the 200 moving average is at 25.75. So I don't think you're getting that. Woo! All right, next. What did they come for in a big way? So obviously this chart looks good. You can see, coming off the lows from mid-September here, especially when it recorded this overbought. This is when the stimulus started to be announced. Yes, if you bought here and you chased it, you're underground here. And again, this is still the China chart. But overall, a winner, right? Okay, let's show you Brazil. You tell me. I think Rocco could figure this out if he wasn't pouting upstairs. He's really been annoying lately. I'm just talking about because he pees everywhere. So 52-week high for Brazil is last April. This thing has looked like absolute crap. The low came December 18th when the Fed cut. This thing got a paltry 23 RSI, trading all the way down to $22. And now we've had a rip all the way, essentially $26. They came for it in a big, big way today, 4%. This thing hasn't really come close to its 200 moving average since we were eating, ice cream cones on the beach, late August here. Okay, so now what? Geez, this thing has been a loser. Of course, there's dollar ramifications and what the U.S. dollar is doing and what tariffs as well. I think this one has a little bit more to go in terms of accumulation. I think this still appreciates in terms of duration. I have a full near-term target of about 26.30 on this. So I don't think it gets the 200-day moving average, but I think it gives folks a good run for their money from all this move from 24 all the way to potentially about 26.5. I don't think it's done. Nice looking candle. I think it tries to match these mid-February highs of about 26.5, and then it starts to give way. And I do think it potentially has a date with about 24.75 and starts to reverse. But for now, I do think a little bit higher for a loser asset like Brazil. And then the next one, a winner today. Don't usually look at this ETF. Very correlated with XLE though. FENY. Sounds like it's a fentanyl ETF. Those are jokes there somewhere, but I'm too tired. It had Trump to do with it. I'm just exhausted. But here is FENY. I'm thinking of it, and I'm just exhausted. So this is basically XLE, very close to XLE. So here, but this one is the one that recorded the multiple standard deviation move today, and it has volume up 3% today. You can see the resistance, the 200-day moving average. It's falling at 24.80. Right here, in terms of XLE, in terms of FENY, it's really weird to say. I'm very mature, obviously. I think this continues to appreciate. I think this has bullish accumulation here. The energy, the oil trade. I think this gets to about 25 even. I think it actually goes above this 200-day moving average just by a hair, by about 1%, and then it starts to go wayward and go south again. I don't think it's an absolute turnaround in energy, and it's the place to be as viewed from this ETF, but I do think it has a little bit more bullishness to go. Good looking candle. I think it tries to get, basically to where we were earlier this month before that really big collapse on March 3rd. All right. Only one big loser today, really in the ETF space, and it was volatility. So a bullish day, down 8% today, 8.5% nearly. Let's see here. We peaked in terms of fear, pretty good, gauge. It's volatility on March 11th. This sucker hit 60. So as it's hard to do technical analysis on a non-time series like this. This has a lot of dynamics in terms of the short-term borrow. Does it on VIX futures in the short term. There's also a midterm VIX ETF as long as a longer term. This is the more liquid VXX that I look at. I believe this is in distribution mode. Thus, the S&P is in accumulation or bullish mode, but to what levels? So the 200-day moving average, we're talking about the S&Ps starting to flatten, possibly go down, at the end of next week or so. VXX's 200-day moving average, and again, there's dynamics because of the borrow. After this thing hit lows in July, which was $40, and I was wrongly calling for new 52-week lows, as you can tell, not really going out on a limb here. A blind man could have made that prediction because look how close we came all the way through the all-time highs here, which we did on SPY. Feb 20th, we got within, $1 of new 52-week lows, and that's when I was calling for it. And then we had a sharp, really the change was March 3rd. We closed above the 200-day in vol, as like I said, through VXX, and we peaked on March 11th. Now what? I think this is going to head towards 49. We got a little bit to go, I believe, to the downside. We closed at essentially 52 today, a big crush, down 8%. The 200-day moving average is at 47.5. The issue is, I think that holds. If we have another big move, like we saw today, consecutively, then I do think this starts to go below its 200-day and starts to go below 47.5, and that would be the calculation of puts or insurance premium positive for the market as those would start getting cheaper, and then I think you see calls start to get more expensive. But again, still too early to call that. Volatility has been bid. I'm doing that simply as above 50 RSI environment. This thing's been bid literally since 2 days after we put in the all-time highs. So it's almost as if that happened on the 19th in the markets, and then 2 days later it went whoop. And then people were bidding up volatility, and they were getting, a little bit more cautious and wanted to hedge. Okay, those are the moves of the day. If you got a ticker or something, put it in. We can take a look. Now let's zoom out a little bit more and do the top 3 gainers of the past 5 days. No repeating charts though, because I'm tired, and let's not kill a dead horse. Best gainer of the past 5 days, if you were long gold miners, congratulations. I do want to say the biggest absolute moves this week were obviously to the downside. So we'll do drum roll for the bigger absolute moves that were all 6% plus. I talked about them at the open of the show. But the bigger movers to the upside, what are folks buying? Gold miners. And this is not only one of the biggest trades of the week, it's one of the biggest of the year. So it's up 1% today. It's up 4.5% in the past 5 days. We've been talking about this, that you have to include this in your portfolio. We called for an entry. I have it here on my chart, March 3rd. So yeah, that's a little bit too pretty. So I'll even take it at the top of that bar. It's about $40 entry. And here we are at about 43.5. That's all the way about almost a 10% rip in just 11 days. Now what? My full target is about 44. So I might have a little bit to go. The highs were October 22nd, 44.22. So pretty close to that. This potentially wants to do it. Again, gold, new all-time highs today. These are gold miners, so obviously a touch of equity. And these guys have board of directors. It's a little bit different valuation process in terms of the exploration and production of gold versus GLD itself and those, zombie apocalypse people that are going to Costco, like buying bullions and stuff. So different investor class. But this thing's been trading great above 50 RSI since mid-Jan, coupled with it closing above a rising 200-day moving average. All the reason in the world, honestly, to buy this on Inauguration Day, politics aside, there was just really all the reason to buy this at $37. And Vamoosh, you have a gain to 44 here. More so, I'd rather wait for a pull. I mean, I think this probably continues to run, but a better entry just so you have better risk to reward. I would like to probably sit this one out for 2 to 3 weeks and ideally get in around $41. This does technically, have what is it, $1.10 ATR on a $43 stock. It moves as well. Pick your spots. Probably just need like a big beta day, and then they reverse on this potentially, and that could be your entry. But this is one of the stars of the year. You'll see what I'm talking about later. We do have a question. I'll look at that at the end. Can you get a look at nat gas? If you can, I will, because that'll be actually the last sticker I'm talking about, and you'll see why, because it's one of the stars of the year. So I will take a look at that. Thank you, Tony. Next, where are we at? Okay, second biggest winner of the week, and we put this in Brazil. Yes, a lot of it was today's 4% rally, but this thing's up 4% on the week. This is big for Brazil. It doesn't move like this. 5 days ago, again, we were about $24 to $25.80. That's a big move. Like we already had the forecast for this. I'm not going to talk about it. Again, probably moves up to here and then starts to revisit that move to that 24 handle again. So that's it on Brazil, but the second best place this week. So again, gold miners, Brazil, and then the last one, we already talked about it. There's only a couple themes this week that were happening, and then it was China. China, a big move, especially through the ASHR complex, up 3.5% this week, and that was actually through this day's gain. But I'm going back 5 days, if that makes sense. So 5%. Up 3.5% going back from there. All right, top 3 losers the past 5 days, and this is where stuff really got rocked. Airlines, one of my favorite places I think when I did my end of year recap, Jets was the 4th best trade of 2024. It was the worst place to be this week. What's going on? Is it a microcosm of the market? So these guys peaked January 22nd. Don't like what's happening here. The character change started 4 days ago, and we got to close under the 200 moving average. Is it starting to go south? It's almost. It's flat. Basically, it's stuck at 22 even, recording oversold behavior for quite a while, for the first time since it's been on the 52-week lows at Yen-Mageddon. Now, what do we think? Superstar, give it the benefit of the doubt, or is this over? Because Southwest is, charging for bags. Honestly, similar to the S&P, this is, I would thought minimum, this should hold, honestly, the 200-day moving average right around 22.15 is where I had. So this needs to go up a bit more. What I mean by like similar to S&P, this is, sad. It's kind of like the example with the kid spelling cat in 5th grade. You're a superstar. I expect more. And that's what I expect from the airlines. This is a whole ton of red. Good to see the high volume day on February 21st. That was a lot of capitulation, but it just went continuing lower. And that's why you don't want to be the first to just buy on a big down day where you think the volume, even if it is the biggest down bar this entire year and a top 5 winning ETF trade of 2024, it still continued. Okay, so this had 9 million shares traded that day. This was 6.5, and we continue to go lower. Decent looking hammer here that bottomed at 2070, and here we go higher. So like I said, the first meeting with this has to get to 22. I think it does. It would be good if you got some good consumer news going forward. Again, sound like a broken record, but cancellation of tariffs, things like that. And then this thing could get to back to like 23.5. But first things first, similar to what I said about SPY. And then, of course, similar to what I said, SPY 610, that roof is holding immensely. Yeah, this 27 high looks way in the rear view, but I do potentially think it can get there eventually, but it's going to take a while. Jets, worst place you could have been in this week, and I guess that's for Aaron Rodgers too. But all right, Ark, the second worst place. Obviously, Tesla was holding this thing down. Tesla down. These were all down 6 to 6.5% this week. Airlines, Ark, same thing. These guys have character changes, and you see big moves happen when you get that character change. It's kind of like exit right. It's like someone screaming fire in the theater. This, I'll give it the benefit of the doubt, still has a rising 200-day moving average. I'm not ready to give up on the mega cap trade because it represents quality in many cases. The problem is when you look at the rest at the end of the show, the best trades of the year, and I'm not talking about 2 months, 4 months, 8 months, like child like short-term myopic lookbacks. I'm looking at last March 14th through today. Very few United States exposure, and ARK is very heavy U.S. exposure. Similar to what I said with Jets, these guys are all trying to gasp for air here, trying to get for a lifeboat. Very little oversold behavior, although it did do it for the first time since Yen-Mageddon. This thing has to hold at least 50, like I said. So that's another 90 cents away here. The 200-day moving average is at 51. I do think it reclaims it. If you get really some market help, I think this can get back to 55. This, as we know, is super volatile. And like these guys peaked with the market in mid to late February at $68. So that is in the rear view. First stop, it's got to hold 51. For all these guys, if you're not above the 200 moving average, unless you're a superstar like Palantir that's already reclaimed it and it's ain't no thing. These guys all have to reclaim their 200-day moving average to reinstill confidence. I don't want to compare markets to the Sixers. The Sixers are a joke and garbage, and they've been for quite a while. These guys are superstars recently. So almost think of, it's almost in the power rankings, someone dropping from, well, this is Ark, and Ark was a star and one of the best ETFs for Trump during the Trump administration one. This is like someone ranking from, falling the power rankings from number 3 to number, 14 out of a league of 30. So it's a little bit scary, but it's going to get their wind. I think this will hold. Horrible, momentum, obviously. We've had swoons like this before. The most similar one would probably be this drop from last March. This ETF went from 51 all the way to 41. That was a very, very sharp drop. And then it really kind of did nothing all the way to the lows till August. And then ahead of the election, it started picking up, as of course when Tesla was marching towards $400. So a lot of things going under the hood. And of course, another horrible spot to be in, XRT. And this is really weaker than the charts that we've just been looking at. Jets, superstar, 52-week high in the past 3 months. Ark, superstar, 52-week high in the past 3 months. This not just superstar, 52-week high in the past 3 months. And this thing, not only that, has hit 52-week low yesterday. So this one, throwing the baby out with the bathwater. If you look at the holders of this, Target, there's a lot of losers in here. Kohl's, if you looked at it, it seems like everyone's either on Amazon but shopping, and that stock doesn't look too good either. But in terms of the competitive space, it looks like every retail, there's no need for that kind of commercial real estate anymore for malls, as what XRT is selling, because it is how the chart looks, due to what's happening with the consumer and potential recession, of course, especially with everything that's happening with potential tariffs. Similar to what I was saying before, the 200-day moving average. So this is the opposite of a Palantir, of course. This is way word away. I don't know. But this is way away from the 200-day moving average. It was pretty staunch right here at 77. Now we're $10 away from that. That is a lot of heavy lifting to be done. So let's break it down easy. First stop, let's see if this thing can get to 70. For all these markets, I'm not anticipating further downside. This was impressive, or I should say depressive, that it got as low as it did. Folks were really throwing out the consumer. This thing's been largely oversold from February 27th. Something I don't like to see is you actually got bearish confirmation here, meaning new lows in the price here in the ETF was confirmed with lower RSI, got to 20.5. So that's crap. Lets me know that there potentially is more selling, and the Bollinger Band also expanded to 65.5. Could it be a little bit lower? Yeah, a piece of garbage like this is going to take time to bottom. Also, as we were talking about the 200 moving average, look at this. Nice, steady incline, staunch. And then what happened? Starts to decline just like that. A big bars like this really cement that. So, heaven forbid, or hopefully we don't have that in the S&P, but that really, once you got that bar, then the 200-day moving average, obviously with the nearest calculation, especially if you have an exponential, but this is simple calculation, starts to go south. And then really what happens when it starts to go south? Exits. So that's what we're talking about SPY. And it could happen, in a couple of weeks, months, days, who knows? But that's what you don't want to happen. That's why we're warning about the 200-day moving average. Should we get a bunch of more closes and start to go like that, you're going to really start to see people say, oh, China looks amazing and all this other stuff. So have your spidey senses on guard for that. I don't know what accent that is. Feels like a Friday. Okay, so XRT, we did that. We're one of the worst places you could be in. So again, wrapping up on the week, best places, gold miners, Brazil, China. Worst places, 6% losses. This is where the absolutes were, and these were the top 3 trades of the past 5 days. Short Jets, short Ark, short retail. You sniffed it out. If you had that, that was the perfect ETF portfolio. Congratulations. If you were short airlines, because there were stories in that this week, and that was a really hard trade, honestly, because a couple of the different airlines were flying, pun intended, different directions, which I think is typical now of airplanes, sadly. Second was Ark. If you wanted to play a correlation or dispersion trade with Tesla, that one was kind of easy. If you want to do a pair trade either, although that would have hurt. Short Tesla, long Ark, or short Ark, long Tesla. I wouldn't do that one. And then short XRT. What an awful piece of garbage. All right. Next, top 3 trades. My favorite part of the program. I never like to miss a Friday show. If something happens, baby is coming soon. My screen just blacked out as I said that. Oh, la-di-da. I will always try to never miss a Friday show because it's super important for me and my analysis and my trading as well. So I never try and miss a Friday show. They're all important, but Friday I never miss to try to miss a Friday show because it's helpful for me as well. Now, top 3 trades of the past 52 weeks. I think you know what I'm going to type in. And Tony, thank you. I hope you're sticking by because your ticker is included on this list. Foreshadowing. So first off, FXI, look at this. Your number 1 ETF, long or short, for the past 52 weeks. So for all you home gamers that are maybe not good with calendars and math. So from last March 14th through today, this sucker is up 56% to a new 52-week high today. Tells me 2 things. You don't have to know, honestly, much of anything. But it's number 1, and it's a new 52-week high today. So kind of like that analogy I had before with the power rankings. This thing was like, the green triangle in ESPN. This thing rose up a couple of spots to number 1, and it's number 1 today, and it's been number 1 for weeks. So this is like your Dodgers. This is your Philadelphia Eagles. Let's go Saquon, Jalen team. These are, your Celtics. This is your champion right here. Here's the difference, or here's the impressive spot. Great looking chart. Really, Yen Mageddon now in hindsight was the scary moments. No oversold. Registrations here of trading this year. Jan 10th was really your best bet in hindsight in recent history, or this year rather, to get into this sucker at 29. And now you have beautiful 200-day moving average, 29.75. Let me zoom out and tell you what I was talking about. Actually, this is FXI, so I didn't have a target before. That was ASHR, and they are different. So again, full target short term for me is 38. So like I said, I thought this was going to, and we were talking about this last week, the week before, for new 52-week highs coming for this. It was just a matter of time. It did it today on an up 3% day. So this is still your stallion, okay? This is running. This is kind of like the old Bitcoin. This thing has juice, okay? And they are marching into it. And one of the reasons is, let me zoom out here. This is even, so So this is important here. Okay, let me zoom out so everyone can see on a 5-year chart. So this had been extremely heavy. Okay, so each bar here represents 1 week. The 5-year high, I'm going back, was February 2021. So if you recall, this was after COVID. So this is what they were having their comeback here, and they this ETF peaked at $55 back then. Okay, so important to know. So each bar here represents 1 week. The low, my God, was just January of 2024 at $21. So we've really, I'm a big Fibonacci guy. So super important. So you look at basically here's the high at $55. Here's the low at $20. These take time. So right there is 75. Middle is about $37. We get there today. So you start looking at the next level of either it's going to be the 62% Fibonacci retracement, or you can actually challenge or trace it with the chart and start to look at where the next resistance is. The next resistance is $42, and that takes you to the October 2021 highs. And I think this still has juice. This thing can't go to the sky, though. What's interesting is the behavior here. Things really got. This is what I like to see. When the stimulus was announced in China, it wasn't just a an oopsie. This, look at the trend line here. This is a really long trend line. This 200 bar trend line. Of course, each one represents a week, and that support now, long-winded. That support now is at 30.80. Okay, so full valuation, short-term target 38. Short-term meaning the next week or two. A much better entry is around 35.5. Sounds crazy, but I do think that is not a bad entry. And those were highs talking about, as recently as September, talking about when the stimulus was announced. So I think getting it at 35 is a good target as we get to 38 again in the future. And then if you're really in this for the longer term in China, and I think you kind of have to be now, this is not a flash in the pan. This is the best ETF trade of the past year, a 56% or an average of 1% per week. So, I mean, you get paid in volatility. Like I said, it has almost Bitcoin-like attributes. The next level would be $42 in a couple of weeks or months time. This thing moves, obviously. Okay. Woo! Number 2, best trade of the entire marketplace. Gold miners. Okay. So a lot of these are like African ADRs. Yes, there's US companies as well. But again, FXI, what's the correlation? Chinese companies. Next best trade in the market, gold miners. Not really, straight up buying SPY. You don't get that correlation. Okay, so the shoppers are going to different parts of the store. Full valuation for GDX, I think we talked about this earlier in the show. $44, so potentially a little bit more. And you know what? For these, because we're talking about the best trades of the past year, I'm going to keep the 5-year chart up to let you know, what's coming up next. So these guys, very close. These guys peaked August of 2020, right after the throes of COVID, when that horrendous time was. These guys, and it was really obviously a lot of fear. We were buying gold. We were buying gold miners, and it went to $46. We're very close. We're $2.50 from that. These things still have momentum. Okay, these I want to give the benefit of the doubt. FXI hit 52-week high today. You'd have to be an idiot to say, "Oh, this is it. That trend is over." Could it, reverse and correct to the 21-day exponential moving average in the next 2 weeks? Yeah, it probably should actually, and that's going to be your entry. These are not, flavor of the week trades. These are, you have to allocate, in my opinion, to these. So it's FXI, it's gold or gold miners. Oh, gold has a very similar return, a little bit less than actual gold miners. And it's kind of maybe confusing to folks. It's because of the slope and how it moves. So gold, new all-time highs. Yet again today, the gold miners didn't do that, but the gold miners are up more year over year. That makes sense due to the slope. And it actually doesn't even look like it has a ton of slope because the 200-day is just stuck at 32. Again, much better entry. You might have to wait 2 weeks or so. Get in if you can at 41, and that will get you in a better move towards that 46 target in a couple of weeks to months probably. And lastly, Tony, thank you so much for being patient. Are you from Italy? I see his name is Tony D. Italy. I love pizza. I'm getting pizza tonight. I think you do too. Let's look at natural gas. I typically do get natural gas when I have pizza, as I think some do. Nat gas is your third best trade of the entire past year. Yes, it's called U.S. Natural Gas Fund, but again, that is not exact correlation with United States markets. So again, what are the best trades of the past year? Is it semis? Is it home construction? Is it consumer staples? Is it, utilities is high on the list, But again, it's China, it's gold, that shiny yellow metal, and it's nat gas, plus 40% for the year. So a little bit less returns than the gold miners. So again, and look at this thing. These guys peaked in the August 22. Again, this has been a piece of crap ETF. I do want to note, yes, this was $138 in August of 22, and that was when there was European winter concerns that they weren't going to be able to have electricity, and BTUs weren't going to be able to come by the average European family, especially in Bohemian places. And this did get there. The problem is this ETF has reverse split many times, and overall, it is not a great chart. As you can see, the moving average start to go lower, 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 lower. Here's the good news, though. So you're talking about, what's your exact question? Can you look at natural gas when you get a chance? You are in Italy? Oh, bonjour. Mi scusi. So these guys hit, as you know, in October, $12, okay? And we've almost got to a double here. We're basically $22. Now what? It's your third best gainer of the year. Gives you some diversification as well, especially in the United States. You want to get into something else. I think this is setting up right here. So be careful, of course. But I think an entry here around 21.5 is awesome. I think it's going to come under potentially some pressure over the next 1 to 2 weeks. Let me zoom in to show you what I mean here. So the 52-week high first got to $24 4 days ago. Okay, so this is 52-week highs 4 days ago. Market was panicky, of course. Remember, NASDAQ being down, 4% on Monday. So, fast from false moves come fast moves. And this went from $24 to $21 very quickly. This thing, moves quite a bit. Look for this to base right around 21.5, and I like it on the way to a $25 target in about 3 or so weeks. I see you have a comment. Is it bullish or bearish? So hang on. So I like it. As I said, it is a bullish setup near term here. I like this headed to about $24. I think it's going to get very close to this highs. Just be careful because, again, as I see VIX distribution mode, SPY soft, to medium slope and accumulation mode, that potentially has a lid on some assets like this. Go Birds. I just saw it over there. I react very quickly. Go Birds. But yeah, this looks great. So as I zoom out here 5 years, be careful with an asset like this. I'm not sure if you want to hold that gas for 5 years, but it definitely belongs a spot in your portfolio for 2025, it seems, for right now. What a sharp rally off the lows in October. And again, you can't help it. It's going to have a bit of a ways. The next spot I would look at would be those fall 2023 highs of about $31. That's 50% from here. It's nat gas. We'll see. I don't think this thing typically zooms into the summer. Be careful. Folks can exit this very quickly. I have almost PTSD. Not PTSD, but I used to continually roll put spreads in this. Let me zoom out here. When it was really, really crap, I was looking at that Bloomberg or the KOLD ETF. This thing was super weak. I used to look at the tags of the 200-day, sell, 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 and then here is where the character change happened. That's what we're talking about, microcosm for the S&P. That's what you don't want to see. You want to see it hold, the 200-day hold, and then a beautiful spring forth above it. But you're not really seeing that right now for S&P. That level is 572, magnetized to that level. You should too. Once it closes there several times, confidence will be restored. Hi, can you also see NU? It already rocketed, but maybe. NU, is that are you talking about new holdings, the stock? If you can confirm, Gaston, what's going on, man? Are you talking about NU, new holdings, the stock, trading at $12? I think you might be. Yes. Okay. So NU, yeah. So this is the bank, like a digital bank. Looks like out of LATAM. That's right. These guys are a $52 billion bank. Pretty large. So these guys peaked. Let me go back to the 1 year chart here. Let me know if you have a time frame or anything on this. These guys peaked right when they announced their earnings in November. These guys peaked at $16. And yikes, big earnings has been really big for this company in terms of confirmation or denial. You really kind of want to cling to this more so than not, in my opinion, because so what happens here is the next day after, and I see this with some companies, like really they just go with where that most recent earnings print is, like really. So what happened here is, and sometimes it takes, my point is it takes like the next quarter earnings release to turn that around. So really, so what happened here is they had an ugly report, or at least an early ugly reaction to it for these guys, and it's traded ugly, lower and lower. Nice hold of $10, although that's the 52-week low back at Yen Mageddon 967. So, I mean, what do you think about this? You're trying to go long or short? I think this will be in accumulation mode for about another week or so, but there is staunch resistance there. That 200-day moving average, I think that's going to be as good as it gets for it, Gaston. That 200-day moving average, which is now flat but slowly going lower at 1287. I potentially see it getting to as high as that 1287, and that's about it. And then probably reverses back to this 1130 level. All righty. Any other questions? No. Got a couple of go birds. That's good enough for me. Whoa, we went 45 minutes. I'm out of here. Go diffuse some beauty and love to other people's lives. Have a great weekend. Happy St. Patty's Day. Go to a parade. Luck of the Irish. Peace.